Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's March 9th. This will be our chart listing for the day. And finally, just looking at the daily chart, we had a reversal type day here. We opened down here near the lows, and we had found some stiff resistance there at that previous support. It acted as resistance yesterday and tried to today, but we got through there and closed above it today. And even though we're trading somewhat off those highs here in the overnight, we are at least still above the support. If prices come back and test that and it holds and we go higher, then we could see a rally here. I'm not ready to say the downtrend's over, but I mean, we've been way oversold, as you can see. Didn't quite get oversold as bad this time as we did the previous couple of times, but we're definitely oversold. I think probably what we're going to see is still a lot of volatility with the market, maybe up one day and down the next. So maybe we'll move higher as we do that this time rather than lower, because we've kind of done that the last few days, but moved lower. So we'll see what tomorrow brings. But I'm not ready to say the downtrend's over by any means. There's still a lot of negativity hanging over the market. We still got the Ukraine-Russia issue out there. Gas is still sky high. Even if the war ended tomorrow, I don't know if we're turning the Russian oil back on. And so there's still a lot going on right now. So we will just have to see. But I thought I'd throw this up to show you there's at least some positive to today. Whether or not we get any follow through, that's another story. And this kind of went how I expected it. I wasn't sure if we'd get above that resistance, but when I put out the mid-morning report this morning, of course, my call was that it was at that point, it was kind of a sideways type day with a upward bias, and that's kind of how it ended up. I expected we'd try to retest the highs, and that's what we did. So we actually made new highs today. So positive day really. And again, can we get any follow through? We'll just have to see. But let's flip over to the 2000 tick chart and go through the trade. Okay, you can see we had really you had to play this sideways until we started going higher, and then of course obviously look to see if this goes higher, and it does. And you can clearly see that midline in there playing both sides all day long. And the interesting part was once maybe a little after around 10:30 or so, we finally got some support off that upper resistance level. We broke through it several times, but it couldn't hold. And really, before you want to start trying to buy, you got to be careful buying into that. You got to have enough room, and you need a good setup. And there's maybe one good buy here, and maybe another green one here. You can see most of these I've marked for sales, and even those are green. But finally, we came back and got some support, and then made some higher highs here. And then you can see a couple of buys come in until we made the measured move up here, or just basically where the upper side of the range would be, and it or not range, but the upper side of the trend channel. And it was pretty obvious when you drew it here. You should have clearly seen that midline holding all the way across there. So, but the interesting thing was from really about 10:30 on, we were in the upper half of this. So even though it still got kind of an upward choppy feel. I mean, this whole day really from 8:30 on was an upward biased, choppy sideways kind of day. But the bias was upwards, and most of your best trades were to the upside. There's a few sales in there, not many. Most of your trades were going to be to the buy side, and that's because there was an overall upward bias pretty much all day. And this is a spike. We spiked up and went into this weak channel. There's this support or this resistance that we were seeing here. That's the daily resistance that we were seeing on the daily chart. And you can see once we finally got through there, we kind of trade. We didn't go very far, but I mean, it doesn't look like it went very far. But I would say if you just go see where we went to, of course, you can't see I mean, it's 33 points. I mean, in today's standards, that's not very far. But on a normal day, that's a pretty good move, especially with all the resistance we were finding here early on. So um, we closed back real close to that support resistance level. And that's that point on the daily chart. That's this blue line here. And you can see we pushed above it, and we're still above it even now. We closed above it. But we really had to fight to get through there, and then we still sold off those highs. So just wanted to come back and show you where I was talking about as far as that support resistance line. And now hopefully it'll act as support, and maybe we'll push higher. But yeah, you see the big picture there. Let's zoom in, go through the trades, and there's a few of them today, so I'm going to try to work through these pretty quickly. It's already 5:30 today, and I've had a pretty long day, so I'm going to try to get through these pretty quickly. But you can clearly see this spike and channel up. Now, we had a bit of an overshoot here, at least it looks like we did. I mean, even if you move it up there, it's hard to tell. I mean, it still fits pretty good right there. And that might even be it. I mean, you can see that gap. That's a good way to know if your trend line. See the gap right there? Let me zoom in. Notice that there's no overlap right there. When you see a gap like that over a line, you know it's generally telling you it's correct. So in the end, I don't think we had an overshoot, and that's why we probably didn't get a break over here. But it looked like it just because we weren't getting to the highs here, and that's where I drew it because that's where it looked like it fit early. And looks like we maybe get an overshoot. But in the end, because of that gap right there, when you move it up here, I mean, it gaps over that line right there, and everything else still fits real nicely. In fact, it maybe fits a little better. So I don't believe there was an overshoot. You still have to kind of watch for it until you get over here and see what happens. And it wasn't long after before we got a break, but I think it's just because of the strong, that's that strong resistance right in there that we're fighting and can't get through. So there's just a lot of selling coming in there. So anyway, 7 o'clock comes on this push up right through here, and then we pull back and you get a first entry and you pull back. There's technically a second entry right there. The high on this bar is 44.75, and you can see this one's 45. So it's a one tick move up there, and then it goes lower and it bounces. But the thing was, we were not back to the key entry point here, and then suddenly it comes back and it trades way down here, and then you get this big reversal bar. I like going long there. Basically, you get your close outside and your move to a new low all in one bar. You may not could get in this trade. I still marked it green because it's truly not a second entry, but I still would want to go long there if you can get in. But notice the gap over right there. And if I put a line across there, I'll let you notice this. But if you see where, look where these closes were right here, and I put my line on that. And that's where your high is. Notice you made a high there. So that's where that resistance was. And notice that gap. It gaps over that support resistance line. Don't ask me why it does that. I call those thin spots. I've heard other people call them thin spots too. Generally, your orders tend to pile up on one side or the other of important support and resistance. And maybe that's what causes it. I don't really know for a fact, but I know that it's very common to see that gap right there. And somebody will write me inevitably and say, what gap? I don't see any gap. Well, notice how most every bar has some form of overlap. Well, notice this bar, let me get this off here. This bar right here closed on its very high, and the next bar opened on its very low, and there's no overlap between those two bars. So that's technically a gap, and it shoots higher. And the market doesn't like gaps, and generally they're going to come back and fill them. And notice it came back and filled it. Actually made two legs down before it went higher again. And that may be what led to the break of the trend channel here. But that gap is important to watch for a couple of reasons. One, it'll tell you where there's important support and resistance. It kind of confirms your trend lines and your support and resistance lines when you see it. Just like I showed you on the midline here, that really tells you that midline's probably right there. And that's a gap right there. And notice it ticked back and filled it on this bar before it went lower. Just like any other gap, the market doesn't like it and it wants to fill it. The charts do not like gaps and they like to fill them. So anyway, you may take this trade and you may not could get in it because of the gap. You might have had to play, you would have definitely had to play, unless you were really quick to get your order in, you would have had to play a limit order to get one tick above, and it takes off and moves pretty quickly. And of course you get two legs back, and that's the first break of this main trend line. So if you'd had a good signal bar here, maybe you go long there, as long as you got room back to the EMA. But it doesn't matter. You don't get a setup there. And it pushes up and it pulls back. and breaks lower and fails, and it traps people, I don't think I would enter on the engulfing bar here, being below the EMA and almost being a little double top. Of course, this bar is huge, but in this volatility, you can't really be concerned. I mean, let me rephrase that. You definitely want to be concerned about how big the bar is, but I still have to mark the trades because they're still the same trades. They're still valid. You just have to decide if you're willing to take the risk for a 32 tick stop. So maybe what you do here is you let it break higher and you try a little better. If you get too aggressive with your limit orders trying to get a better entry, you're going to miss, because if you'd have had your stop way back down here close to the EMA to try to make it really less, to be more conservative and less risky, you don't get even close to getting in that trade. But now if you draw your trend line up through here and you kind of see where it's at, maybe you say, okay, I'm going to risk it back to just above where it's going to touch the trend line and give it room, and it comes back and touches it and goes higher. Maybe you get in like that. But most of the time, if you don't put a buy stop one tick above that bar, or enter at least one tick above that bar, you may not get in it. With these bigger bars, maybe you do, but on most days, the best trades, you're going to miss them because they're just going to take off without you. So I like that entry. It runs up. That's just a higher low after two legs down. And then it runs up, makes a new high, pulls back. It gives you a failure right there. And you might consider that, but it's not back to the EMA. It is the first break of this. I think you got to wait for a second entry there, and you don't really get it. You go higher and pull back, and you get another first entry, and that signal bar is not very strong. That looks more like indecision. That looks like congestion there. It does push on up and would have worked, but you can see real quickly the bottom falls out of it. And if you want to be super aggressive, maybe you take that low. But in this case, since this was a strong uptrend, you just about have to wait on a lower high. And you just don't get, I mean, you get a lower high, but it's way down here, and that's too far. I don't think you want to take that lower high. I think you want to wait on a reversal by that point if we're going lower. And notice we don't really go lower. You go right back through the EMA, and that just looks like congestion now. There's a little range there. It actually starts over here. You can see that, and goes this way. I did mark this one as a possible green because it's a higher low, and you're still looking for prices to probably go higher. And basically what it is, you've got a short trap here. Notice you got a first entry and then a second entry that fails, but that's not where you really want to look for a second entry. But when it tries to go lower again and fails and turns up, if it breaks higher there, you're probably going to get a scalp. It's a rather aggressive trade, but we could go up and retest the highs, but you'll probably get a scalp even if it's going to fail. And sure enough, it fails. And there's a lower high right here, and you might trade that, but it's right into the EMA. It looks a little congested. It looks like more of this congestion right here. Notice how all of these closings and most of the openings are inside this bar right here, these two bars. And so it looks a little too congested. You can tell we're probably setting up a range, and we don't have enough information that we're going to go lower yet. So you just kind of got to wait here. And then we just kind of chop back and forth. And finally you come up really short here and you get this big bearish bar. I like that one just to ride it back down to the lows. And we actually push on down here on this one and then bounce. If you got a good signal bar, maybe you go long there on the failed break lower since the overall bias is up, but your signal bar that's bullish is an inside bar. This is your trading signal bar, and it's too bearish. You get another bounce off the lows here that reaffirm the supports back in play, but again, your bar's too bearish. And then it turns down and fails and turns back up. If you have enough room from here to here, you got to take that trade. You want to take that one because you probably got the shorts trapped. And you can see that's what they had to do to push it on through. They trapped the shorts in order to push this on higher. Look how many times they tried to go higher here and couldn't do it. So finally they let prices break out the low side, and you got tons of sell stops down here, and you people going short down here because they don't know any better. They don't know how to trade price action. They don't understand how prices operate, and they get trapped. And a bunch of them exited right here. You can see. But there's a bunch of them that are going to wait to the other side. They're going to put their buy stops on here, and that's why when it broke through there, it rockets up. But once they run through those stops, the bottom falls back out, and we start all over again. So that's how these ranges operate. And that's why they operate the way they do. You can expect that a lot of people got short right here, and probably some more got short right here that think they're going to ride this lower, and then it bounces on them. And they probably say, well, we'll give it one more swing. And when that breaks higher, you can see it just rockets straight up, and from right there, it finds just a little resistance, and then they push it through, and then boom, it rockets straight up. But once those buy stops that are all piled up above this resistance level here are run, there's no more momentum, and the buying dries up, and boom, the bottom falls out, and we're right back in the range again. You can see that. It's exactly what happens. The buyers are still coming back in right here. They're probably taking advantage of, this is probably profit. All this is coming down right here. These people, when it starts finding support, they start taking profit, and kind of goes undecided till it gets back to the top, and then you make a lower high, and that's also a second entry short. Again, we don't look for second entries in a range like this, but if you get a good setup, which is off the highs, plenty of room to the lows, we've been running from the highs to the lows, and it's also a second entry, we'll take that trade, because that's just a little more reason to take it. And of course, where does it go? It goes right to the lows, bounces momentarily, and then the bottom falls out of it. And there's probably not going to be as many buy stops down here as there were this time, because we've already run a lot of them right here. And so once we push through this time, it runs on down, and it tests this support that we were finding across here. And technically you get two legs down, and you get a little bit of more than a measured leg right here. And it bounces, and you get this higher low, and look how bullish that is and how far away it is from the EMA. We're way overdue to come back, especially after being that close to it for so long. And so this is probably one you want to try to ride back to the EMA, and it does. It runs on up, and then you make a new high here, and you get a first entry, and you pull back, and you get a second entry, and there's also a failed second. This is like a failed failure. Notice the new low, and you get a first entry and a second entry, and it breaks higher right there. And so there's probably some people that are probably trading that as a failed second entry short, and it just instantly fails. And so it's a little congested, but it's a failed failure. But when it makes another high here, if it breaks higher from there, all of these shorts that got hung up in here, and probably some that's still hanging on here, are going to give up and look at it. It rockets up again. And they give it enough momentum to just shoot right on up, because now they've cleared out. This probably cleared out a lot of the buy stops up here, and it just shoots on through. And the momentum, got new traders jumping on. You might even have some new buy stops that have piled up after this. This is probably where the people that got short here, it's going to be their line in the sand is right here. So there's probably still going to be some safety stops there that can get run. And it runs up, and eventually it runs out, and it runs into the overall resistance level up here that we talked about earlier. I showed you on the daily chart. And when it pushes through, technically you got a break and a new high, but you got an overshoot here. Maybe this is two-tiered. Well, didn't mean to do that. But maybe this is a two-tiered channel. It fits. It's not the way I would want to draw it. I really think that's a break. Yeah, I'm trying to move it from the wrong spot. I really think that's a break and a new high. And then you get a little overshoot at the resistance, or you get the resistance there. And then we just kind of start chopping along again. And I don't see anything I like here. No shorts, no longs here. That was a great signal bar, but you got to go long into the highs, and you see what would have happened. You get stuck, and then finally it breaks out, and it actually breaks out above the real strong resistance, and it doesn't get very far. And look at that big bearish bar. We're probably going to at least come back to the EMA, and we may break out the other side of this little range. We may even turn down and go all the way back down to the other side of the range, or the channel, the trend line that may be right here. But definitely the range, we could come all the way back down here to the other side at this point. So I like that trade, just to try to get a scalp out of it. But you can see it runs on down. It comes back and gives you a lower high, but not a very good signal bar, and that's got a little momentum to it. But you can you notice what happens here. We just kind of keep working higher. Now you got a triple test. And notice how you made a lower high there each time, and notice how your closes are lower each time. So you could treat that like a failure and go short right there if you want. It's a little aggressive, but this is a good place to maybe short this, especially with all this sideways stuff in here. And right here, you're just basically stuck between those highs from the daily and this support right across here. And even this is still part of that. They just were able to push the resistance a little higher here when we went higher right here. But you still got a range here. And once again, you got to try to go higher 3 times. So you may take that trade. It looks really congested, but you can see there's room to get out before these lows. Maybe not on the EMA. If you're going, you may want to try to get a limit order here, which you probably could have gotten another tick or two. There's no problem with it. It runs down, but there's always a risk. But you can clearly see by that point we're running from the lows to the highs of the lows. And this one's tempting. But I would wait on this lower high here, and then it's too big. You don't have any room. And then, of course, it bounces. It would have worked, but I wouldn't take that trade. And then it bounces. And as long as you got room to get out here, you're probably coming back to here at a minimum. But with that big move down, they're probably going to run it out the other side now with a little momentum. And so just make sure you got room to get out. I'd be a little bit concerned about between here and the resistance, but you can see we've pushed through that fairly easily the last few times. So this is probably the resistance you need to worry about. So, and notice we ran up there. Actually, we did find some resistance here, but pushed on through. I mean, it was an easy scalp. But then it pulls back. The only reason I don't like that one is by the time it closes, you got to go long way up here. And if you go long on the engulfing bar, you're right into that resistance. And that's too risky because it's been holding. So I don't think you can trade but you can trade the failure, and that's a second entry short and a big bearish bar. So you could trade that back. At the very least, it's coming back to here, and it's probably going to come back to the EMA and test this, and it may fail altogether, which it does. So I like that trade. It's a little aggressive. Usually you want to wait on a lower high, and you do get a lower high here, but by the time it closes, I mean, it's an engulfing bar, and it's not one I would necessarily trade as an engulfing setup, but and by the time it closes, it's too much stem, so it doesn't qualify. And turns out we do get a second leg down, but I don't think I'd want to trade it. So we come down here, we bounce, and notice you get a first entry, and you come down here and you get a second entry right here. This trend line's not clear at that point. It looks like congestion, but this is the very low of it. You do have to go through the EMA, but when you got it in, when you're in a range and prices are swinging back and forth like that, consistently above and below, you can't worry so much about the EMA. Yeah, it could always come back to haunt you, but if you just don't have much choice, you just about have to take that trade because most likely it's going to push through. There's a chance it could hit resistance and turn down, but since this is mostly sideways in here, you can see we were above it. Now we're below it. We'll probably run back up and test these highs at a minimum. And instead, this thing breaks out and it just keeps going. Now you got a new trend, this whole yellow two-tiered trend channel. And of course, it does confirm it right here. And that's fairly bullish, but that's just a first entry long. And it's not a failure to the downside or anything like that. So I think you got to wait. You do get a failure right here when it breaks higher, but that's too congested. And you've already made a measured move up based on this leg up and then your two-legged correction and now your next one. So you got to be concerned about that. But notice you get a triple test here. And you got a little room back here to these highs. So you may take that one. And it's also off that key entry point. It's not perfect, so I marked it green. But notice you got a new low there, and you run up here, and you get a first entry that goes higher, and then you get a second entry short. So if it breaks above this bar, it's a failure. It's not quite back to the EMA, but the trend line's there, and it's holding. And so that's telling you something. It's probably too strong to get back to the EMA. So you may want to risk that trade. It's aggressive, but it's, if you want to take if you want to be a little more aggressive, because sometimes they pay off, that's one you might consider. And of course you make a new high here, and then you get your first break, you get a first entry, and you pull back, and that's a second entry long. Nice bullish bar, and you're expecting prices to make a new high. I like going long there. It does make a new high, and then it just kind of drops. I don't think you want to. This went too low to really look at that as a triple test, I think. Although you could consider that. I think you're pushing your luck there. Wait and see if you get a high or low, and of course you don't till way up here, and it's too late then. And then we're just kind of, the momentum's just kind of finally drying up a little bit, and people start taking some profits when they think it's going to drop. And you can see every time we push higher now, the buying is we're making lower highs, and you do have a little trend channel here, a break, new high, and a lower high. This one is very tempting. I didn't mark it. There's a triple test across there. It's a really bearish bar. It's right into the EMA though, but hey, we're coming off the highs. We're not even close to the midline. So you got to be a little careful with it. Wait and see if you get a reversal. And so the way I play it, I really looked at this as a double top, and then you got a first entry and then a second entry. So when it broke higher there again and failed, if it goes lower there, you're probably running down to the midline at a minimum, and you may go to the other side of the channel. And so I like that one. Again, this is one that maybe you argue for it to be green on a triple test, because the EMA is flat again there, but you can see we bounced off of it a few times. So we could bounce off of it again. So it's just a little too aggressive for me. Just the way the market's looking right now. I mean, we're losing momentum here to the upside. And it's not long before you see what happens. We get this big move. So that may lead you to want to take that. We run down. You get your first break. You get a first entry right there. You move up and you get a second entry short right there. And you haven't made a new low. You're a long way away from the EMA, so you may risk that one. Maybe you wait on a lower high, which comes here. You can't take that. It's not a good enough signal bar. You've really moved too far for a lower high there. Maybe you look at that as a failed second entry long, but again, it's just looking really sideways there. Look at the EMA again. I think you're better off just to kind of wait. It's kind of this looks like indecision. It's not able to go up, but it's not able to go down either. And the overall bias is up most likely still, because your blue channel's still in place, and we just came off the midline, and we're kind of working higher off that midline. You can't go long in there. Again, I just think this is more sideways. And there's that like a repeat. We've seen that several times. And if you notice that, maybe you take this one. I'll mark it green because it's a repeat pattern, and we've seen it a few times. Drops down, comes back. Same thing here. We saw this earlier in the day too, exact repeat pattern. It's a failed failure here. Notice it try to go higher once, twice, and it fails, and then it goes higher instead. So you might even take that trade. Technically, you're trading it as a failure or a trap. So your signal bar could be an inside bar. I'm not crazy about it, but you could trade it, especially if you recognize it's a repeat pattern. And then, of course, you come up here to the highs again. You get a first entry, second entry. It fails, and it gives you a big bearish bar. You also might say, hey, it tried to go higher 3 times, triple test. Really nice bar, way away from the midline, way away from the EMA. Plenty of room. I like that trade. And notice how it bounces off the midline. You come up, and you come back down, and again, it bounces right off that. That's basically a higher low there. Again, off the EMA, again off the midline. It looks like a little range almost, and so you may take that one too. It's a little aggressive right there at getting so close to 230, but we're still going higher here. And you can see that midline. Once you see it bounce off of it, it bounces off of it again. Normally you want to see it a couple of times, but there's an overall upward bias. So that's if it would have been the second time, I probably marked that blue. And that's what I saw today. And again, another 30-minute video. just, I mean, there's so much price action. It's just hard not to do a video in less than 30 minutes these days. So, but anyway, I'm not going to beat around the bush. I'm going to wrap it up for today. We'll be back again tomorrow. We'll wrap up our week tomorrow. No chart lessons on Friday, so we're just doing them Monday through Thursday now. And we'll be back to do it tomorrow. So I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next